Welcome back to the channel, everyone. Today we're going to be talking about the ideal way of organizing your SaaS business's profit and loss statement. A lot of P&L statements I see today are organized by cost source instead of by department. I'm going to be walking us through an example of what I'm talking about here, and then I'm also going to point out the operational insight advantages that you gain by organizing your P&L by department. As you can see, what I have here is an example profit and loss statement for a SaaS business. And as we were saying before, what I like to say is that this P&L is organized by cost source. So you'll see here that I've got the cost source for some personnel represented here as gross wages. We've got commissions and bonuses, payroll taxes, travel expenses, advertising, rent, telephone, office supplies, etc. These are obviously the business's sources of cost. And there is value in looking at your P&L this way. For example, trend analysis is particularly easy to look at here. However, in terms of helping you actually run your SaaS business model, this is really not giving you what you need. The way one would ideally organize their profit and loss statement is by department, which would look like this. As you can see here, we have our cost of goods sold line and the four underlying departments that comprise cost of goods sold. Some people refer to departments as profit centers and cost centers, so that's just in case people have used that other terminology. But for the sake of this video, I'm going to continue using the term department, and you'll see here that our cost of goods sold departments represent the functions within our business that are used to specifically deliver our current software product to our existing customer base. The most commonly used SaaS departments are technical support, professional services, customer success, and cost of operations, also referred to as DevOps. Our other four departments are going to be research and development, sales, marketing, and general and administrative. And you'll notice that these are comprising our operating expenses. The way to think about operating expenses is that they're any cost that the business incurs that is not directly related to delivering the current product to your existing customer base. The way that you would go about actually creating this P&L is that within the most widely used accounting softwares that exist today, you can, quote unquote, assign different costs to departments that you designate. And so the way this would work is that you'll see here that I've got a list of our cost sources that are from our original profit and loss statement. And within your accounting function, your accounting team would effectively assign whatever proportion of these costs here to their respective departments. That way you can see what departments are responsible for what costs. And this would work for all of the departments. So you'll notice I've got this list of cost sources. You would have the same list of those sources under every single department in both cost of goods sold and in your operating expense departments as well. And those costs would roll up. These are blank, but they would roll up to be the totals that are being shown here for each department. If this is something that you're not already doing, I would highly suggest looking at incorporating this design into your accounting process. Now, the prevailing advantage that I want to talk to you about is that you can actually see where your dollars are going. So for example, looking at this P&L here, I wouldn't be able to tell you what I'm spending on R&D or accounting or marketing or even possibly something like hardware. But here, I can see all of those things and more, and then I can start making good decisions against that additional insight. Let's say, for example, that I'm the owner of the SaaS business, and I haven't really been happy with what our R&D team has been producing for the business, and I want to shift the dollars that I'm spending in this department to my marketing department. Let's say I want to make this shift because I just want to grow my base and have good cash flow from the business. By having my P&L organized in this manner, meaning by department, I can actually see what's happening month over month as I'm reviewing this, and I would be able to raise my hand if I saw that my costs were staying the same, even though I'd asked my team to possibly make this operational switch. The point, though, is that I would not be able to tell if that's happening, at least in a manner that's convenient, by just looking at these cost sources the way that they're laid out here. I would only be able to tell if that shift is happening within my business and within my respective departments if it's organized like this. Let's look at two more examples in our cost of goods sold categories. I'm going to open up some notes here that I like to always include in my different templates. So I want to look at technical support with you and run through a kind of a real world case study or thought experiment, and then same thing with customer success. So let's just start by reading this note here. So technical support is the cost of providing technical assistance to users. High support costs can indicate inefficiencies in your product, i.e. bugs or usability issues, or inadequate self-service options like documentation and FAQs. Analyzing technical support can guide investments in product improvements and automation to reduce the support burden while enhancing customer satisfaction. So let's think about a real-world example of this. Being able to see that my costs went up here allows me to then go to my technical support team and at least ask the question about, hey, what happened here? And let's say I talk to my team and they say, hey, this new feature that we recently launched, it looks like our average ticket volume by month is up whatever number, 300 tickets a day. And we can tell that 200 roughly of those tickets every single day relate to this particular feature. And we had to hire 2 new people to accommodate the volume. This is incredibly valuable to know because now as an owner, I can go to my other departments and say, hey, we've got a problem here. Can we now create some kind of solution so we can avoid all this extra volume, or at least reduce it in a drastic way so we can redeploy those new hires somewhere else in the organization, or consider the fact that we maybe don't need them if we make a good investment in fixing this usability issue. And the point that I want to drive home is that you could not have come to that initial insight, the insight literally right here in understanding that the cost in this department went up, is how you then created that chain of events to bring you to all that incredible operational insight, going to the technical team, seeing what the problem was, and then being able to make a good investment, right? That came to fruition and it started because we could tell that this department's costs went up. You would not be able to get that insight from looking at this particular P&L as it currently it stands. All right, now let's look at our customer, another example, and in this time we'll look at our customer success department. So for customer success, this particular department is focused on ensuring customer satisfaction and long-term retention. If customer success does not sell, which it can in some cases, you want to include the entire department in cost of goods sold. However, if some of your customer success team does sell, you want to include a little bit of cost somewhere in your operating expenses, probably in your sales or it's going to be in your sales line. But the important point is that tracking these costs helps us to evaluate the efficiency of our retention efforts. It helps us answer the question, are we spending too much on low value customers? It also helps us understand if our customer success managers have the right tools and metrics to engage clients proactively. Optimizing this area can improve your net dollar retention and reduce churn without overburdening your team. So let's do the same thing here and walk through an example. Okay, let's say for example that on a monthly basis, we're doing a great job of reviewing our income statement, our cash flow statement, our balance sheet every single month. But in addition to that, we're also doing cohort analysis in order to calculate our net dollar retention and other retention metrics, so that we have good visibility into them on a month over month, quarter over quarter, and annualized basis, okay? Let's say, for example, that at some point in January, we were looking at our cohort analysis and we just were not satisfied with our retention numbers, okay? And we decided to hire, let's say, 2 more people, or maybe we introduced some kind of new SaaS software that increased our costs. You can see I've got it right here. We are going to increase our costs by $7,500. And now it's been 3 months and we're sitting here at the end of April, right? Basically what I would do is I'd be looking at my cohort analysis over these 3 months, right? And I would be checking to see if what we implemented, whether it was new hires or new software, are impacting those retention numbers in a way that we would like them to. Let's say, for the sake of example, that when we look at our retention numbers, they're about the same as what they were in January. And you might need a longer horizon for those retention numbers to really change, but this is just an example. But let's say we get to some point in the future and we just have to be honest with ourselves and say, hey, this initiative that we started back in January that's costing us an extra $7,500 is really not producing the results that we want. And now we can at least make a decision on what we want to either try next. Maybe we cut back the cost, or we put those dollars towards some other kind of retention improvement strategy. But again, the point I want to make is without being able to see your department cost increase like this, and by just having this cost source type of organized P&L, you would never get to that initial kind of question or ability to track your departments the right way in order to then go ask the right questions and look at your operation from a departmental level. Okay, we're gonna wrap up this video with a couple extra key points. This is my template for the quote unquote like ideal way that you would set up your SaaS P&L. I wanna share a best practice point about your revenues. So you'll notice here that I have two revenue lines. I have one for recurring revenues and I have another one for one-time service revenues. It's extremely important to bifurcate these two revenue sources and then also use this bifurcation to come up with, to calculate gross margin metrics for both of them as well. Tracking this bifurcation between recurring and one-time services is something that you're going to want to have from an operational perspective, but it's also something that investors are going to be asking you about. And so just incorporating this into your normal process is going to ease the burden across the board in terms of operating your business better and accommodating any kind of investor requests related to revenue. You'll also notice that I have a section for bookings here and a breakout between the four booking categories that you would want to ideally track. Every single one of these categories and the change month over month gives you insight into what is happening within the composition of your customer base and how your different initiatives within the business are impacting that base. So be sure to track your bookings, obviously net bookings, but more importantly, tracking the underlying categories within bookings so you can really capture the advantage of having that insight. And then lastly, I always like to include at the bottom of statements, or sometimes at the top, just depends on how important they are, a handful of different key metrics. This can be a number of different things depending on your SaaS business. Certain examples might be your cost of customer acquisition, customer lifetime value, average order value, your CAC to customer lifetime value ratio, different conversion rates. And then finally, I do think it's important to look at your main paid advertising channels and again, any kind of important underlying key metrics within them. So in this case, the example is that our first major material channel, we're going to look at spend, lifetime value, CAC, return on investment, and return on ad spend. Again, the value here is the context of time. Looking at any of one of these particular metrics isn't like specifically meaningful, but it's the context of time and your understanding of what the business is, what the initiatives within your business are trying to do, and really understanding if those initiatives are producing the numbers and ratios and different kinds of financial relationships that they should within your business. The other huge advantage of doing this is that when you go to build a budget or you go to build a forecast, let's say for investors, being able to look at these metrics in a historical fashion, especially if they've been measured consistently over time, is going to help tremendously stress test and give reasonableness and justification to the assumptions that you're using in those kinds of budgets, forecasts, etc. When you're looking forward at your operation. One of the things I enjoy the most about looking at let's say we have like a particular budget, we look at 1 month, and then we have our actuals coming in and we're comparing the difference between the two. The numbers up here are obviously good to, you would be comparing those two things and it'd be great to see the variance between the two. But when it comes to the underlying assumptions that we've used in our budget or our forecast, that's real, because those are the most meaningful things, right? If your conversion rate isn't anywhere near close what you budgeted for or you forecasted against, that can materially change your outlook and perspective on how well your business is really doing. And that to me is where a ton of value is added in tracking these metrics from a temporal perspective, and also in the greater context of what kinds of spend we have in our particular departments here. All right, team, that's all I had for you today. Again, really take into consideration all of the advantages that I talked about by having your P&L organized by department as opposed to by cost source. And again, you should be able to reach this output using the majority of the widely used accounting softwares out there. Please contact me if you have any questions. My name is Kyle. This is D3, and I'll see you on the next one.